Hello and welcome back to the channel. If you're thinking about buying a home or refinancing, let's talk about what's happening in the mortgage and housing market right now. Mortgage rates held steady at 6.6% last week, according to the Mortgage Bankers Association. That's actually 33 basis points lower than this time last year, which is helping keep things moving. Purchase applications jumped 7% and refinance applications shot up 15% week over week after a few slow weeks. So there's a bit of positive momentum for buyers and homeowners right now. But the big story today is inflation. The May Consumer Price Index came in right at expectations, with headline inflation rising 0.5%. Most of that increase came from higher oil and gasoline prices. Year over year, headline inflation moved from 3.8% to 4.2%. The core inflation number, which strips out food and energy, was much tamer, up just 0.2%. That was actually a little better than expected. However, shelter costs continue to climb. Rents rose 0.4% last month, and shelter overall contributed heavily to the core reading. On the bond side, mortgage bonds are slightly higher this morning and yields are relatively flat. The 10-year Treasury is trading in the middle of its recent range, and we have a 10-year auction this afternoon at 1 p.m. Eastern that could give us more direction. Now, the wild card is what's happening overseas. Oil prices jumped this morning after reports of escalating tensions between the U.S. and Iran, including strikes and retaliations. Higher oil prices feed directly into gasoline and can eventually push up costs in other areas like airline tickets, which we're already seeing. All of this puts the Federal Reserve in a tough spot as they head into their next meeting. Inflation is rising, but it's largely driven by energy prices rather than broad wage or demand pressures. A rate hike right now would be complicated, especially with the impact it could have on stocks, home equity lines of credit, and borrowing costs for businesses. For you as a consumer, here's the bottom line. Mortgage rates are still in a relatively stable spot compared to the past year, and application activity is picking back up. But ongoing geopolitical risks and sticky shelter inflation mean we need to stay watchful. Rates could stay volatile in the near term. If you're in the market, now might be a good time to talk to a lender and lock in if the numbers work for your situation. The market is watching the 10-year auction today and tomorrow's producer price index numbers closely. Thanks for watching. Drop a comment with where you're at in your home buying or refinancing journey, and I'll see you in the next one. Stay informed, and I'll keep bringing you the straightforward mortgage and housing updates you need.